Good evening, traders. It's Simon at Kairos Capital Markets with a special update with a chart and a little thing I'm doing. So this is a two-part video. The first part I'm going through very briefly now. It's about my private mentoring program, about how I actually teach you. It's £200 a month. It is. That's 200 GBP. With that you get phone calls with me, direct access, you get charts. This is what I want to show what we do now. So if you look on the right hand side of the screen, you can see these are the pairs I actually analyze and look at. I have data for all these pairs, indexes, commodities, you name it, even a little bit of cryptocurrency, although don't go on I'm not heavy on the cryptocurrency to be honest, but you know, I've got a little bit there as well. And the idea really is to teach, no matter what level you are, to teach you to come to a professional level where you have the ability of understanding what the banks are thinking, understand what the traditional investors are thinking, understand when you overlay fundamentals as well, you understand what's going to happen there. So time wise, how many people actually learn? If you're new, you can be there for a couple of years, I suppose, really, in all fairness. If you've got experience in the market, understand most of the patterns and all that, it's just a mindset issue. That can be anything from 1 month to 6 months. That can be really, in all fairness. It depends on your mindset issue, really, in all fairness. But that's why you have someone like myself to actually just, you know, put my arm over your shoulder and say, look, you know, this is the bit. If you look at this one, look at the other side of it, well, the flip side. I'm just there to just open your eyes a bit and just help you to develop yourself into a professional trader. So if you're interested in that, email me at simon@kairoscapitalmarkets.co.uk. I'll put the link in the comments and put a little tag on here somewhere. And we'll go from there, really, pretty much. Or if not, you can shoot me over a Facebook message or something, or however you want to do it. It's not too much of an issue. So anyway, so we're going to go into the oil chart. This is the USOil. I'm going to go through this one now and show you exactly what I'm thinking and why I'm thinking, and why $60 is such a key area. So as you can see on the quarterly chart, very, very simple. Where the yellow circle is, that's where I think it will all happen. So like I've got here, quarterly break and retest of a 20-year trend line. So you could say this is a triangle, but you can, if we just take that out for the moment, you can clearly see 1 touch, 2 touch, 3 touch, 4 touch there, and now it's the 5th touch there as such. So $60 is quite key there. The quarterly 50 does come into play, but it hasn't really been the most respectful in the world, but it has done something. So you could say the respect there, a kind of mini respect here, crash through there, and now we're coming back up again, which is quite interesting to see. You can also draw the Fibonacci's on here as well, and even the Fibonacci comes down to 0.382, and the fib extension brings you down to virtually 0. So if you understand the fib extensions as well, that's quite an ironic thing. Now on the monthly chart, just look over here, monthly, the same trend line, this upward sloping trend. I'm going to take this one out as well for you guys. And notice how the 50 EMA, monthly 50 EMA, has respected this chart, path of least resistance to the downside. So what I want to show you now is this. At the beginning, the 50 EMA didn't do anything at all, but after it's like trending upwards, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 6 touch, 7 touch, little touch, 8, breakdown, show us the $60 test again, 1 touch, 2 touch, come down again, come back up, and now you're at the monthly 50, $60, and this upward sloping trend line, which 1, 2, 3 touches cleanly on the monthly chart. So this area here, $60 a barrel, is so key. You have no idea. The path of least resistance is to the downside right now. If we break above it and close at $65 a barrel, I would probably say we're going to turn bullish. If, however, we can't break the $6 a barrel and keep bouncing off it and start creating bearish price action on the weekly and daily charts, that is when you want to sell. Now, the other thing as well, what you notice is this. Notice how when we drop down here, it's back on the quarterly chart actually, guys, this is. So what you notice is this, is when it touched $35 a barrel last time, normally it is just a couple of candles. Each candle's 3 months here. Couple of candles, 3 months, and it comes back up again one way or another, will come back down, no problem. But in this zone here between $60 and $35, it took 6 months to come down, test, come back up again. Here it came down in October 2014, and October 2017 was still forming within this zone. This tells me that the buying pressure of $35 has really slowed down dramatically. and I would probably turn around and say to you that this is now looking quite bearish. There's not much sentiment to the upside now. So $6 a barrel is especially what I'm looking for. So now when we come down to the weekly chart now, I'm going to take most of this stuff out again as well. We don't need half this stuff. We know what it's like on the higher time frame. So we just need again $54 and $60. The reason why is because if you look at the $54 mark, we have had multiple resistance recently of this, and $60 is obviously our key level here, and you can see in the past, and 54 there, 54 here, 54 here, 54 here. So this is the zone we're in at the moment, this little zone here. And what we're going to find out, I'll just draw this zone in for you quickly, this little zone here we're in. Now what we're going to see now is we're going to see some bearish price action starting to happen soon. We'll start seeing some deceleration, this, that and the other. But not just yet, because the daily at the moment is still bullish. In the same zone, $54 to $60, this is still a bullish chart. And for this to head to the top, you're going to need to have obviously some more buying pressure there. And that will come along as we see bit by bit. And there's your upward sloping trend line there. So once we break to the downside, this upward sloping trend line here, I will tell you there's a valid sell signal. But if you're going to sell, you need to put a nice safe stop somewhere up here. If you was going to sell that early and hold, it won't be an easy like, oh, off it goes, here you go. Because if you look here, it shot up. This was back in 2015, and it messed around 1, 2, 3, 4. Then it just dropped down. So notice me, it closed below the 50 EMA. It had one little test, boom, gone. That's it. So notice here, it come down to test the daily 50, come down to test daily 50. Didn't like it. The minute it closed below the daily 50 EMA here, it tried a little bullish candle and then just collapsed. That was it. That was it gone. And obviously, depending how you would trade and what you want, I mean, you could do something like that. For example, we put a nice safe stop up there, and you could trade it following the daily 50 EMA if you wanted to. So you would get out, play around back here somewhere, roughly here or roughly there, depending, how you want to trade it. Or you put your limit down here somewhere, you're guaranteed 2.5–3% there. It depends exactly how you trade and your style. But again, though, with the mentoring program I produce, we find out what style you like. So I've got strategies for short, medium and long term, and depending on your circumstances in time, money and everything else, we have strategies to help you out no matter what. But yeah, so this is what I'm looking for now. So I'm expecting to see still more of a move up to $60. Like I said, we saw it go up here. It can rocket up, no problem at all. We don't really know how it's going to get up there, but we'll get the $60 a barrel. Then I want to see some bearish price action. That's what I want. If you're desperate to get in and you was in over here, you probably want to get, like I said, you may want to get in here, if that makes sense. Just there, put your stop above the highs there, and you could go, well, I can target at least. You can almost target 1-to-1 there, but you may go, I want to go to the lows here, for example, it's like 2.7. You may go, well, I want a tighter stop, you can do that. It's all sorts of things you can do. So just understand, depending on your risk appetite, how you do that. But so oil is definitely a key thing to watch out for. Now, fundamentally on oil, because there are fundamentals to this, you have two sides. You've got OPEC that obviously want to keep the oil price high, which means they might reduce the supply to increase the demand. But at the same time, you've got a lot of countries now and companies that want to go into green energy and solar energy and this, that and the other. So just to give an update, I believe Germany in 2040 does not want a fossil-fueled car in their country, and I believe at the moment that they will not allow a fossil-fueled car to go through Germany either. You have to have electric only, and they're starting to implement charging points all over the place there. So if that Germany and Europe does that, that means most likely Europe will follow suit within 10 years after that, maybe 20 years after that, which means the demand for oil with the motor industry would be reduced quite a lot. Obviously they still need tyres and plastic and stuff, but the fact that we burn a lot of oil with fuel, that's one thing. And obviously we're getting more fuel efficient with airplanes now as well. So you're going to find a lot of the oil supply will be reduced. And the other thing as well, we got a war that may come up with North Korea and America. Now, many people don't want that. You have to look at the consequences economically for that. Now, North Korea is a big import or exporter for China, and China uses lots of oil and fossil fuels, this, that, and the other, for their industrial revolution. Now, if North Korea does get, as they say, totally destroyed by the US, whether that's true or not, I very much doubt it, but either way, if it does happen, that means the demand in China will be reduced as well, and that would be a big hit against the OPEC supply and demand model. So you've got a lot of fundamentals there as well, but essentially a lot of people want to go green, so they're going to come away from this oil burning stuff they are. So keep that in mind as well. That's why fundamentally this longer term chart here would be quite significant to actually now sell to the downside once it gets to $6 a barrel. Okay guys, like I said, if you want to have more information about the mentoring program, give us a shout. I always do a free 30-minute session with someone over the phone, or Facebook, Skype, whatever it's going to be. And yeah, you can actually learn something free of charge anyway there. And if you're willing to do bits and learn more, and I say it's £200 a month. And we go through different pairs all the time. Like I said, I know I do Aussie dollar, pound, yen, a little bit of euro dollar at the moment. But if you can imagine all of these pairs, I look at and understand what's going to happen in each individual one of them. Have experience in trading all these, so it's not just a couple of pairs you get quite a lot of pairs, strategies. Like I said, short, medium, long term, and the idea is to make you a competent trader. So it's not about just giving you signals, that's just a load of rubbish. I want to teach you how to become a trader, and then obviously if you do become well, there is also funding available, bits and bobs along the way as well I can do. So okay guys, take care, I look forward to speaking to you soon. Take care.